All right, let's keep going. Good morning. Welcome to the Daily Money Markets. It's actually with me, Che Yusuf here. We are about to get in terms of NFP and as well as CPI, Consumer Price Index, and PPI, not NFP, PPI, and as well as CPI analysis of the week. But of course, because of it's been a lot of things happening in terms of the market from last week, and again we can be able maybe just to go through to recap a little bit about what's been happening last week. All right, let's jump in terms of last week. Just quickly, let me get to my diary. So the trading data from last week, we saw, there was also, announcement of the Vice President of United States, which comes from Harris, presidents. That was happening last week. Again, they announced the Vice President Tom to become a Vice President of, President Harris Day. And again, we saw last week Disney earnings. We saw WBD earnings coming out, and we saw jobless claim. That was last week Thursday. That was last week Thursday regarding the jobless claim, right? And the jobless claim numbers, of course, they've been surpassing. They've been surpassing, the estimation, which was good compared to the previous week when we saw the number of NFP. So NFP, it was crazy. We're pushing the price down, but comes to the jobless claim, it was a little bit of better. So again, because of the price, the instrument and the stocks in the stock market has been pushing the price all the way below, all the way down. A lot of investors and analysts, they are actually thinking that they are US is getting to the recession. So it says the stock falls as investors weigh the risk of the recession this year. So pretty much they do have a little bit of probability to think that maybe this year it will be we'll get into recession because of how the market has been actually dipping, right? So again, moving on to actually coming to this week, or the end of the last week to this week, we saw the crazy stuff happening in the Middle East that pushes the price of oil, WTI, and as well as Brent oil goes over to $80 per barrel. So oil climbs back above $80 per barrel as the traders watch for Iran retiration. So again, they are waiting for the Iran retiration. So that is why the investors, they are actually on a panic mode, and we see the price of oil, Brent oil, and the crude oil picking up, goes all the way up. Once they retaliate to Israel, definitely we're gonna see the price of oil pushing maybe to $85 per barrel, maybe to $90 per barrel. But I'm playing, it shouldn't get to $100 per barrel. That means the oil will be very, very expensive. So again, even the beginning of the week, we saw the drop of the Magnificent Seven, all the instruments like a Microsoft, Nvidia, Tesla. We saw them actually, pushing the price a little bit of back down. So that's one of the few stories that has been happening last week. But probably what we want to do today is actually just to analyze in terms of PPI, Producer Price Index, and again in terms of the CPI, Consumer Price Index. Again, remember, we are actually sitting here waiting for the Federal Reserve to start cutting. US Federal Reserve, let me be specific, to wait for them to start cutting the rate on September. The confirmation data is supposed to be the NFP, but the NFP didn't match or didn't meet the expectations, so it has to pro in terms of understanding the data that will come if they're going to give us the soft landing. So that's what exactly they're looking for. They already make a decision. They already confirm that they will cut the interest rate, but we don't know how much they will cut the interest rate. So the only thing that are concerning with, it's a soft landing. They don't want to have a hard landing when they start cutting the interest rate. So the next data that will be very important for the Federal Reserve to actually look on it will be the CPI, Consumer Price Index, of course backing up with a Producer Price Index, PPI, that is coming this week, right? That is very, very important. That data, it will actually give a little bit of confidence to the Federal Reserve to say that, okay, this is how much we're going to start cutting the interest rate. So already the economists and investors, they've been starting already saying that, of course, especially JP Morgan, Citibanks, they're saying September it has to start cutting with 50 basis points, which is really, really crazy. That means if they start cutting with the 50 basis points, the following month they have to start 50 basis points until December to cut 50 basis points. So expectation is 150 basis points has to be cut before the end of the year. That's expectation from the bank analysts, like JP Morgan and Citibank, and the different types of investors, investing companies, right? So that's where we are sitting. But we saw from Bank of England, they cut it for 25 basis points. We saw from European, central bank, they cut it for 25. They started to cut for 25 basis points. So we're not sure if actually they're gonna cut for above 25 basis points. But my prediction, I think they're gonna follow what all these banks has been, or all these Federal Reserve has been actually saying. Maybe they will cut with the 25 basis points, and then maybe getting to November they can push it to at 50 basis points, and then January, Feb, they put it maybe again on the 25 basis points. So that's my prediction when it comes to the interest rates. But again, what we are doing today is concentrating on the PPI, Producer Price Index, as well as Consumer Price Index. So let's get to the chart. Yeah, now we're back on the charts. Pretty much we're looking at right now UK 100. UK 100. They call it again FTSE 100. The first thing why I'm looking at the UK 100 is very, very interesting stuff that just pop up. This morning on Tuesday, the UK unemployment rate dips unexpectedly to over 2%. So they were actually releasing unemployment rate on a Tuesday on a 13/08/2024, but they missed that unemployment rate with a 2% dip. Again, if you look at it, the Bank of England actually cut the interest rate with the 25 basis points, but the previous month they didn't cut anything, although the central bank, European Central Bank, did cut with the 25 basis points. So pretty much I'm expecting the following month, from this month, to put the interest rate on easy, to put it on a hold, because of, again, we can see unemployment rate from that region actually dipping already. So we saw how the market has actually performing from yesterday, from Friday, pushes the price all the way back to 82,245, and then from there, because of the dipping of unemployment rate, and again tomorrow Wednesday we're gonna see GDP, Great British Pounds GDP. So we are expecting a volatility there again from Great British Pounds. But because of this unemployment rate dipping for 2%, I'm expecting the UK 100 to start again reversing, maybe to let's just to be on a safe side. 8,050 might be the great opportunity for UK 100 to actually push the price. But once it breaks here, we are looking at 7,924. 7,924 when it comes to UK 100. The story of Dow Jones. The story of Dow Jones has been actually very, very interesting. When you look at Dow Jones, we're sitting a month ago. Dow Jones was sitting at 41,400, for the 2,000 as well. If we go to a daily time frame, pretty much for the 1,425, that's where Dow Jones were actually sitting. But because of what has been happening of dipping of the instrument, we saw the instrument pushes the price all the way down. This is why the investors, they were saying they are actually weighing the risk in terms of the recession, because of the instrument like a Dow Jones or US 30 dropping the price from 41,400 in the stock price and getting to 38,500. That's a lot of percentage in terms of a drop. But what are we looking at from this week? I think we already entered in a recovery mode. Pretty much the target, even the Dow Jones, the house of Dow Jones themselves, the target is to put the instrument back to 40,000 mark, maybe surpass the 40,000 mark, right? But right now, I think I'm anticipating a little bit of growth because of the producer price index that will happen today, Tuesday. So a little bit of growth pushes the price a little bit, above to 39,000. It might even break to 39,000. And but I think the CPI is the one that can break to 39,000 here, 39,800. It might be even the PPI. It might break the 39,500, goes to 40,000 MAC, maybe 40,000 MAC. Pretty much it's a move. It's quite a move. If you look at it from 39,400 to 40,000 mark, it might be quite a move. But if consumer price index that is coming on Wednesday and shows the positivity, it actually pushes the Dow Jones all the way to 41,000 mark where it was. So that's the highest anticipation that we're expecting this market to perform this week, as long as the market is positive. Now, we have to understand, as long as the data that comes it's positive, if the data that comes it's negative, what will happen? The market will just go back to 38,500 and preparing for the following week or following data to start actually picking up. So probably if it goes to 38,500, the only data that we're gonna wait to see any type of movement, that should be the Federal Reserve data that will come, on September when they're cutting the interest rate. So that is why the data that comes this week, it's a very, very important data to see the indication of the stocks pushing the price all the way, up, and again to give a little bit of confidence to investors that we are not actually getting in a recession, or US is not actually. All right, so here's how the market is looking at the moment. We are looking at WTI, WTI and the Brent oil with the actually instrument that I'm anticipating the price to actually go up due to the conflict that is happening in the Middle East, and again suspicion of Iran to retaliate the Israel. So there I'm really anticipating that it might push maybe to $81 per barrel, although already Brent oil has been reported already that it records $80 per barrel. So anticipation is the price to go all the way up to $81 per barrel, but it might happen in the course of this week, or it might happen in the course of coming month due to the conflict, how it's going to unfold. Moving on, gold, because of the producer price index and the consumer price index that is going to happen this week, we are anticipating gold to actually maybe drop a little bit. Maybe the take profit, we can give it to 2427, 2427. The reason being, it will be if consumer price index CPI surpass the numbers of estimation. And again, as we say, that this is the last data that the Federal Reserve are waiting so that they can make a decision in terms of the cutting the interest rate or not. So this week it's really, really hot week. There's a lot of Feds reporting from Bank of England and as well as from US. So I'm anticipating gold maybe to drop a little bit because of producer price index, and then maybe it might break 2427, goes to 2380, 2380, 2380. That is the anticipation regarding to gold. The other instrument that actually caught my attention this morning was UK 100. Already UK 100, they reported the unemployment rate that are actually down by 2%. And this week is also the same week that the Bank of England, they're supposed to report in terms of their interest rate. So because of already the employment rate, it hasn't, bring the positivity, or didn't come as surpassing the estimation. Already we are seeing UK 100 starting dipping up, and I'm anticipating to get to 8,043, maybe break to 7,924 during the consumer price index. And again, during the GDP, there's a Great British Pounds GDP that is coming also this week. So if these numbers are not going to look very positive, definitely this instrument of FTSE 100 or UK 100, it might dip down. Moving to NAS 100, still at H4 as a time frame. Anticipation here, it's actually because of we are anticipating the numbers to come from PPI and CPI, and these numbers, if they come positive, NAS 100 will go back to 19,580. But look at where it's coming from. It was on a 20,000 or 21,000. That's where it was sitting, and it pushes the price all the way down to 17,200. That's really a big dip, and a lot of investors and economists, they are actually worried, saying they are measuring the risk based on US recession. Maybe it might be the US recession coming on. So again, the other news that I'm seeing, the GBP sterling of gaining strength on Monday. GBP USD rose to 1.278, a level. If the GBP USD rate goes up, it may encounter resistance nearby 1.284. So here it is, the GBP 1.27. What is it sitting at 1.2800? We are expecting the resistance to come to 1.84, sitting on a bigger time frame, somewhere around this line, to push the price somewhere around to this line, GBP USD. That means British pounds can have a little bit of strength, but based on the unemployment rate that just come out on Tuesday, I'm seeing that British pounds, it's now starting to depreciate. But where do we think it might go? It might go all the way to 1.26. 2671, 1.2671. But of course it will come back to 1.2765 just to retest, and then if the GDP numbers are not stronger, it will continue break, goes all the way down. All right, so we look at Nasdaq. We said we anticipation of a bullish movement to 19, and it might break because of the federal this video. Thank you very much for tuning on the Daily Money Market. Please subscribe, hit the subscribe button. The numbers has to grow.